Quick question. If you had put just $1,000 into Ethereum a few years ago, would you have sold too early, or would you still be holding today telling everyone that you believed in it the whole time? Because here's the truth. In 2026, Ethereum is moving again, and the people who ignored it, laughed at it, or confidently said that crypto was finished are suddenly asking a lot of questions. The same people who stopped paying attention during the quiet years are now looking at charts again, scrolling through headlines, and wondering if they missed something important. Welcome back to 8-Minute Finance, where we turn money talk into real talk and break down the complex world of investing into ideas you can actually understand. I'm Ted, and every week we simplify everything from basic investing principles to the trends shaking global markets right now. And today, we need to talk about crypto. Because in 2026, things are clearly waking up again. Bitcoin is climbing, Ethereum is gaining strength, and ETH is once again appearing in headlines, group chats, and social media timelines around the world. But before we get into charts, technology, or buzzwords, let's talk about money. Because that's why most people clicked this video. If you invested $1,000 into Ethereum back in 2017, when most people believed crypto was either a scam or a joke, that investment could have grown into tens of thousands of dollars at previous market peaks. And here's the part many people forget. You didn't need perfect timing. You didn't need to buy the absolute bottom. Even investors who bought Ethereum later, not early, just early enough, still massively outperformed traditional savings accounts, bonds, and even many stock portfolios. Now let's be very clear. This does not mean Ethereum will repeat those exact returns. And anyone promising guaranteed profits is not being honest with you. But it does show something important. When Ethereum moves, it does not behave like traditional assets. It moves faster, more aggressively, and with far more volatility. That's why people often compare Ethereum to early investments in companies like Amazon, Netflix, or Apple, back when they were still risky, misunderstood, and far from being obvious winners. At the time, those investments felt uncomfortable. In hindsight, they look obvious. Ethereum sits in a similar psychological space today. So what's actually happening right now? Crypto didn't randomly wake up one day and decide to rally. What changed first wasn't price, it was sentiment. Markets moved from fear to boredom to curiosity and now into confidence. And that confidence stage matters. Historically, money moves before headlines get loud. By the time everyone is talking about an asset, a large part of the move has already happened. Smart money tends to position early, while attention follows later. Bitcoin usually leads the market. Ethereum confirms the move. And when ETH follows Bitcoin with strength, it often signals that the market believes the move has real momentum behind it. This is not about one green candle or a lucky week. It's about volume increasing, multiple assets moving together, and attention quietly returning to the space. Now here's where many people misunderstand Ethereum. Ethereum is not just another cryptocurrency. It is infrastructure. Bitcoin behaves like digital money. Ethereum behaves like a platform. Ethereum is the foundation where decentralized applications, marketplaces, stablecoins, and entire financial systems are built. Even today, Ethereum remains the primary network where stablecoins move, where decentralized finance operates, where NFTs settle, and where developers continue building new tools and products. Every single day, billions of dollars move across Ethereum-based stablecoins. That is not speculation. That is real-world usage. When someone sends USDC, interacts with a decentralized exchange, or uses a blockchain-based application, there's a strong chance Ethereum is working quietly in the background. That's why Ethereum is less like a lottery ticket and more like owning a piece of the toll road that everyone drives on. You may not own the cars, and you may not control traffic, but you benefit from the activity flowing through the system. So, how do real people actually invest in Ethereum? Most everyday investors are not day traders. They are not glued to charts, trying to time the exact top or bottom. Instead, they take a long-term approach. Many investors either buy and hold or use dollar cost averaging, which simply means investing a small amount consistently over time. Instead of putting $5,000 in all at once, someone might invest $100 every week or every month. This approach reduces stress and removes emotion, and emotion is where most people lose money. Most investors don't lose money because Ethereum is fundamentally broken. They lose money because they panic during downturns and chase price during excitement. Ethereum has also been declared dead more times than almost any asset in modern financial history. After major crashes, after high transaction fees, and after competitors launched, headlines repeatedly claimed that Ethereum was finished. And yet it's still here? That's because price can sleep, but infrastructure does not. Builders don't disappear during bear markets. Traders do. Ethereum continues to have one of the largest developer ecosystems in the entire crypto industry, and long-term, that matters far more than short-term price movements. Now let's keep things realistic. Ethereum is volatile. This is not a savings account. Prices can move up fast, and they can move down just as quickly. But volatility is the trade-off for upside. Ethereum behaves more like early-stage technology investing than traditional finance. There is higher risk, but also higher potential reward. And right now, Ethereum feels like that artist you stopped listening to years ago, until they suddenly drop a hit song and you find yourself saying, "I always knew they were talented." So what does Ethereum moving in 2026 actually mean? It doesn't mean the cycle is over. It means attention is back. And attention almost always returns before price finishes moving. If you're new to investing and want to learn by doing, I've linked a referral in the description where you can get free stocks just for signing up. There's no pressure and no deposit required. It's simply a way to practice investing and build confidence without risking your own money. If you use it, comment what you received. Free wins still count. So now I'll leave you with this question. Are you investing in Ethereum this time? Or are you going to say next cycle again? This is 8-Minute Finance, Crypto and Stocks Explained Fast. Like, subscribe, and I'll see you in the next one.